Okay, so there's a story unfolding in the world of real estate right now, and I guarantee it's not the one you're seeing in the big headlines. We've got some brand new research that shows a massive financial turnaround is happening, and we're about to walk you through the numbers that prove it. 69.4%. Let that number just hang in the air for a second. This isn't just some random statistic. This one single figure points to a huge shift happening in 2025, and believe me, it's making a lot of people in the industry sit up and pay attention. You see, this number is the headline from a just-released report by AccountTECH, and it tells a really remarkable story about the financial health of real estate brokerages, a story of a major, major turnaround. So what's really behind this number? That's what we're going to do today. We're going to unpack this data, explore the trends, and show you why the real story here is actually way more fascinating than the headline even suggests. All right, first things first, a super quick primer. We're going to be talking a lot about something called EBITDA. Now, all you really need to know is that it's a clean way to measure a company's core operational profit, before all the complicated accounting and tax stuff kicks in. It's pretty much the industry's go-to metric for figuring out financial health. But that 69.4%, it didn't just appear out of thin air. Nope, it's actually the peak of a really powerful trend that's been building for the last 3 years. Let's take a look at the data and see exactly how we got here. So here it is, the whole progression. If you go back to 2023, just over half of the firms were profitable. Okay, not bad. Then a year later, that number ticked up to a pretty solid 61%. But the real kicker is the leap to nearly 70% in 2025. This shows a consistent and honestly an accelerating improvement in the industry's financial core. So this isn't just a blip on the radar, right? This is a sustained march toward profitability. Every single year, more and more firms have moved into the black, and that's creating a much, much more stable financial foundation for the entire industry. So what's the bottom line here? Well, you're looking at a nearly 14-point jump in profitable companies in just 2 years. That's huge. And maybe even more telling is that the number of companies losing money has plummeted by over 30% in that same timeframe. 2025 is, without a doubt, the healthiest this industry has looked in years. Okay, but how did this happen? I mean, the easy assumption is that the big, top-performing companies are just making a ton more money and pulling the average up with them. But you know what? That's not what the data shows at all. The real story is much more fundamental. The AccountTECH research team really puts it best. They said, the most important change is that fewer firms are losing money and those losses are becoming smaller. This, right here, is the core insight of the entire report. It's not about the top getting richer, it's about the whole industry getting stronger from the bottom up. So let's just put that common assumption to the test right now. Is this a story about the rich getting richer, or is it something more structural? Well, the data clearly shows a broad-based improvement, where fewer firms are struggling and the ones that are struggling a whole lot less. And here is the proof. Check this out. This chart tracks the companies that were facing significant losses. Back in 2023, there were 27 of them. By 2025, that number had been cut by more than half, all the way down to just 10. That is a dramatic reduction in deep financial distress. So where did all those companies go? Well, they migrated right here into this much healthier middle ground, hovering around break-even or even slight profitability. You can see the number of firms in this stable zone grew from 55 all the way to 69. This isn't just volatility, folks. This is stabilization. And yeah, of course, the top end is growing as well, with a pretty significant jump in 2025. But when you look at all three of these charts together, the most powerful story isn't the growth at the top. It's the radical shrinkage of losses at the bottom. The entire floor of the industry has been raised. So what does this all add up to? What does it mean? Well, it's a really clear sign of a fundamentally healthier industry. This is a true structural shift in how brokerages are running their businesses. Let's just break it down one last time. The number of firms losing money, it's shrunk. Those really devastating deep losses, they're becoming rare, and more of the industry is operating in a sustainable, profitable zone. This is what a real structural improvement looks like in the data. If you remember just one thing from all of this, make it this. The entire financial foundation of the real estate brokerage industry is getting stronger, and that strength is being built from the bottom up. And all of this leaves us with a really critical question for the future. Is this just a temporary recovery, or are we actually witnessing the start of a brand new, more stable financial standard for the entire industry?